The market never sleeps, and neither do the opportunities. We have a massive week ahead, with tech giants battling for dominance, luxury brands fighting for a comeback, and British staples facing the music, from a potential blockbuster buyout to a sold-out chip crisis. These are the 5 stocks you absolutely cannot ignore right now. But before we dive into the madness, a quick reminder: I am not a financial advisor. This video is for entertainment purposes only. The stock market is risky, so always do your own research. First up, let's talk about the streaming giant that's currently starring in its own real-life drama, Netflix. If you think their shows are intense, wait until you see their boardroom. Netflix is currently locked in a fierce battle to acquire assets from Warner Bros. Discovery, but they aren't the only ones. Paramount is pushing a hostile bid from the sidelines. It's messy, it's expensive, and regulators are watching like hawks. Investors need to be careful here. While Netflix is expected to show solid revenue growth in their upcoming earnings, this takeover saga is clouding the picture. It's hard to see the company's full potential until the dust settles on this deal. Next, we're shifting gears to tech with Intel. For a while, Intel looked like it was being left in the dust by the AI revolution, but things are heating up. KeyBank analysts just flagged that Intel is effectively sold out of its server chips for 2026 due to massive demand from data centers. The stock recently hit a 52-week high on this news, but it's been volatile. Investors are waiting for the earnings report on January 22nd to see if this sold-out story actually translates into hard cash. If they can prove the demand is real, this turnaround story might finally have legs. Now, let's look at British luxury house Burberry. It's been a rough ride for shareholders, with the stock down significantly over the last 3 years. However, there's a glimmer of hope. They've recently rejoined the FTSE 100 and saw their first quarter of growth in 2 years, thanks largely to a bounce back in China. All eyes are on their upcoming trading update. Investors want to know, was that growth a one-off, or is the trench coat king officially back in fashion? From luxury coats to cheap pints, let's talk JD Wetherspoon. Spoons has been quietly outperforming the wider pub market. Sentiment has strengthened recently, and directors have even been buying up shares, which is usually a bullish signal. They have a trading statement coming up, and investors are looking for signs of Christmas cheer. If their festive numbers are strong, it could prove that their low-price model is bulletproof, even in a tough economy. Finally, we have JD Sports. This one is a mixed bag. On one hand, they are innovating fast, rolling out AI shopping platforms in the US that let you buy sneakers with a single click on ChatGPT. That's huge for future growth. On the other hand, the stock recently dipped below a key technical level, and there are concerns about their debt and valuation. Their upcoming Christmas update is crucial. It will tell us if their core, younger customers are still spending money or if they're tightening their belts. So there you have it. Netflix, Intel, Burberry, Wetherspoon and JD Sports. 5 companies, 5 very different stories, and a whole lot of volatility ahead. Which one of these are you watching? Let me know in the comments below. Don't forget to smash that like button and subscribe to the Daily Stock Drop so you never miss a beat. I'll see you in the next one.